Welcome back to another episode. Today, we're diving into a significant development that has everyone talking: Bitcoin's recent $14 billion dip. This is a huge topic because it raises questions about the future of Bitcoin's price rally. Let's get into the details and what this might mean for the market and for you as an investor. So, Bitcoin has recently seen a $14 billion drop in its market capitalization. This isn't just a minor fluctuation, it's a substantial dip that has caught the attention of traders, investors, and analysts worldwide. The big question on everyone's mind is whether this dip will threaten the ongoing price rally that Bitcoin has been enjoying. To understand the implications of this dip, we need to look at the factors that have contributed to it. One significant factor is the broader market sentiment. Cryptocurrency markets are known for their volatility, and shifts in investor sentiment can lead to rapid price changes. Recently, there has been increased uncertainty in the market due to various macroeconomic factors such as inflation fears, interest rate hikes, and geopolitical tensions. These factors can create a risk-off environment where investors pull back from riskier assets like cryptocurrencies. Another contributing factor to Bitcoin's dip is the regulatory environment. Governments and regulatory bodies around the world are paying closer attention to cryptocurrencies. For instance, recent developments in the United States regarding regulatory scrutiny have created some nervousness among investors. The potential for stricter regulations or unfavorable policies can lead to sell-offs, as investors seek to reduce exposure to assets that might face future hurdles. The behavior of large institutional investors also plays a crucial role. Over the past few years, we've seen a significant increase in institutional participation in the cryptocurrency market. These large investors can have a substantial impact on prices due to the size of their trades. If institutional investors decide to take profits or reduce their positions, it can lead to significant price drops, as we might be seeing with this $14 billion dip. Let's also talk about market dynamics and trading activities. The cryptocurrency market operates 24/7, and it's highly influenced by trading volumes and liquidity. Sudden large trades can create a domino effect, where the initial drop triggers stop-loss orders and further selling pressure, leading to a more pronounced dip. This kind of market behavior is something we often see in highly liquid and volatile markets like crypto. Now, considering these factors, what does this mean for Bitcoin's price rally? Is the rally at risk of ending, or is this just a temporary setback? To answer this, we need to look at Bitcoin's historical performance and the overall market structure. Historically, Bitcoin has experienced numerous significant dips and corrections during its bull runs. These corrections are often seen as healthy for the market, allowing for consolidation before the next leg up. In the cyclical nature of Bitcoin's market movements, periods of rapid price increases are frequently followed by pullbacks. These pullbacks serve several important functions. Firstly, they provide the market with a necessary breather, allowing for the absorption of gains and reducing the risk of overheating. This cooling off period is essential to prevent the formation of bubbles that can lead to more severe and prolonged corrections down the line. For long-term holders and seasoned investors, this $14 billion dip is likely viewed as just another bump in the road rather than a sign of the rally ending. These investors have witnessed similar scenarios in the past and understand that volatility is a natural part of Bitcoin's growth trajectory. Their experience with Bitcoin's historical patterns allows them to maintain a more balanced perspective. Instead of reacting with panic, they recognize that such dips often present attractive entry points to accumulate more Bitcoin at a lower price. Additionally, it's important to consider the underlying fundamentals of Bitcoin. Despite the volatility and recent dip, the fundamental factors driving Bitcoin's value remain strong. These include the increasing adoption of Bitcoin as a store of value, the growing interest from institutional investors, and the continued development of the Bitcoin ecosystem. For example, the limited supply of Bitcoin, capped at 21 million, creates a scarcity effect that supports its value over time. Moreover, the broader adoption of Bitcoin and cryptocurrencies in the financial system continues to grow. Major financial institutions are offering cryptocurrency services, and countries are exploring digital currencies and blockchain technologies. This institutional and governmental interest can provide a strong foundation for Bitcoin's long-term price appreciation, even if there are short-term dips along the way. However, it's crucial to acknowledge the risks. The cryptocurrency market is still relatively young and can be influenced by external factors more than traditional markets. For instance, a significant regulatory crackdown or a major security breach could have severe short-term impacts on prices. Therefore, while the long-term outlook might remain bullish, the path to higher prices could be volatile and unpredictable. For individual investors and traders, navigating these market conditions requires a well-thought-out strategy. It's important to manage risk effectively, which might include setting stop-loss orders, diversifying investments, and staying informed about market developments. Emotional decision-making can be detrimental, especially in a market as volatile as crypto. Maintaining a long-term perspective and focusing on the fundamentals can help in making more informed investment decisions. In summary, Bitcoin's recent $14 billion dip is a significant event, but it's not necessarily a death knell for its price rally. Various factors such as market sentiment, regulatory environment, institutional behavior, and trading dynamics have contributed to this dip. While there are risks and uncertainties, the underlying fundamentals of Bitcoin remain strong, and historical patterns suggest that corrections are part of its growth trajectory. That's all for today's deep dive into Bitcoin's $14 billion dip. Thanks for watching, and we'll see you in the next video.